All right, let's jump right in. We're going to tackle a huge question today, one that feels more important than ever. Why is there such a massive difference between money and gold when it comes to holding their value? We're going to break it all down, nice and simple.
So this is the big question, right? You hear it all the time. Gold is a safe haven, something solid. But the money in your bank account, it feels like it buys a little less every single year. So what's really going on here? Why aren't they the same?
And you know what? The answer is actually pretty simple when you boil it all down. It comes down to this one single idea. Money is something we humans just invented. We can create it. Gold, on the other hand, is a part of the planet. We can't just make more. That one difference, it explains everything.
So, let's kick things off with the biggest piece of the puzzle, the supply problem. This is really a story of unlimited versus limited, of something man-made versus something found in nature.
I mean, just look at the difference here. It's night and day. On one side, you've got money. If a government decides it needs more, poof, it can create more with a policy decision and a few keystrokes. But gold? To get more gold, you literally have to find it, move mountains of earth, and pull it out of the ground. It's hard and it's expensive.
So how does new money even get made? It's not like they're just running a printing press in a basement anymore. It all starts with a decision by a central authority. And from there, billions can be created, usually through complex credit systems. But here's the most important part, step 3. When you flood the market with more of something, what happens? The value of each individual piece tends to go down. It's classic supply and demand.
Now, let's flip that and look at gold. The total amount of gold on Earth grows by less than 1% a year. That's it. It's incredibly slow and predictable. Why? Because you can't just decide to make more. You have to find it. That stability is a huge part of its story.
Okay, so we've got supply down. But what about history? How have these two assets held up over the long, long haul? We're not talking years or decades, but centuries, even millennia.
And this is where it gets really wild. Gold has been seen as valuable for over 5,000 years. Think about that. Empires have risen and completely vanished. Currencies like the Roman Aureus or the British sovereign were once the most powerful in the world, and now they're just historical artifacts. But the gold? The gold is still here. It has outlasted every single one of them.
But money, well, that's a different story, isn't it? Its fate is tied at the hip to the government that issues it. When that empire or that political system gets shaky or even collapses, the currency often goes right down with it. And sometimes that can happen shockingly fast.
And that idea of being tied to a government leads us right to our next point, trust. I mean, what's really backing the value of that dollar in your wallet versus a gold coin? It really comes down to a promise versus a physical reality.
You know, the money we use every day, it's really just based on a shared belief. We trust that the government is stable, that the economy is healthy, and that the whole system will keep working. It's a collective promise. But what happens if that trust starts to shake? Well, the value of the money can shake right along with it.
Gold, on the other hand, doesn't need your trust. It doesn't ask for it. It makes no promises. Its value isn't based on a government or an economic report. It's valuable because of what it is. It's rare, it's beautiful, it doesn't rust. It's just valuable, all on its own.
So, okay, we have supply, we have history, we have trust. What does all of this mean for your actual money, for your purchasing power? Well, that brings us to the big one, how these things protect you from that silent thief we call inflation.
And our source material has this quote that just hits the nail on the head. Money is printed, gold is not. It's so simple, but it perfectly sums up that core difference we started with, and it's the key to everything else.
And you can see the end result of that difference right here. Because more money can always be printed, its value, its purchasing power, gets worn down over time by inflation. I mean, think about what a dollar could buy 50 years ago versus today. But gold, because its supply is so limited, has historically held on to its purchasing power over those same long stretches of time.
All right, let's pull all these threads together. Time for the final verdict, a quick summary of everything we've just walked through.
And this table just lays it all out crystal clear. For supply, you've got unlimited versus limited. For creation, it's printed versus extracted. For trust, it depends on the state versus being inherent in the thing itself. And the bottom line? Long-term stability for money is historically weak, while for gold, it's strong.
So here's the bottom line, the big takeaway. It's not that one is good and one is bad. Money is an incredible tool. It's convenient, it's fast, and it makes our modern world go round. But gold's story is different. It's one of pure endurance, a preserving value across ages in a way no currency ever has.
And that leaves us with a final question for you to chew on. When you think about your own future and what value really means, which of those qualities matters more to you? The convenience we all need day to day, or the kind of permanence that lasts for generations?